with energy, and then now you went from internal liquidity, now you're going to go to external liquidity. So I want you to start doing this on a daily time frame and know that you can do this on every single time frame. So let's just say we have the daily, and we're doing this. So obviously not every single day was bullish all the way up here. So if you're day trading, let's say if you are looking at the market during this time right here, right, in this level. So we're going to draw out something like this to illustrate this. Well, the 4-hour or the 1-hour chart might have looked like this. Right, so we get that displacement down. So if you have each internal leg, just like we use premium and discount for our external leg on a daily chart, we can use premium and discount on internal legs, because what this leg is right here, this entire move right here is going to be something like this on a lower time frame. And just whenever we look at this leg, so let's just say once you zoom in, you see each one of these legs is going to be something like this right here on a lower time frame. So you can see it's kind of like an infinite infinite mirror. Like for instance, if you're recording your screen and you have the screen recording software on your screen, it just looks like an infinite mirror. I hopefully you guys get that reference. But if you look at price, you're just always looking at each internal leg as an external leg on a lower time frame. So if we're trying to determine when this internal leg is going to turn around and when it's going to continue, we're going to go to the next time frame. So what I do is the daily, 4-hour, 1-hour, 15-minute. And really the 1-hour and the 15-minute are very similar to me. I just use the 15-minute to refine the 1-hour. So if I'm in a daily bullish range, well, let's say we took out an internal leg. So remember we said we expect small pullbacks after each internal leg because there is liquidity being taken. Money is changing hands. So we take out that liquidity, we're going to come back down. Right? Now, I will say that it's not going to be as efficient as something like this in terms of premium or discount, but you can still use premium or discount and watch for price to come back down. So let's say this, we're just zoomed in on this. We have a low right here. We'll say price, oops, wrong tool. Price comes down below it and shifts up. That tells us that you are shifting up and you're going for this high, which is right here. And you're going to continue that cycle, and each leg in price does that. Now, I'm not telling you it's going to be perfect cherry picking. Okay, price goes on the 1-hour, it goes here, I buy at midpoint, it goes up. I mean, that may work, who knows? But you have to be mindful of market conditions, and it's going to be different each time. But the concept that price is always in some form of external range and in some form of internal range on every time frame is going to help you operate from the top down. So if you want to go from the weekly, okay, is the weekly expanding? Is the weekly pulling back? Once you understand that, then you need to go do it on the daily and so forth. And that way you're going to be able to fine tune all the way from the higher time frames to your lower time frame daily entry. So let's just say if price was right here on the, and I'm looking to day trade. So we'll just scrap this example. And let's say if you're coming into the market and price is right here, right? We're on the daily chart, and you look around and you say, okay, well, we've taken out some highs here for explanation's sake. So we took out some equal highs. So obviously we're bullish in the daily. The target is this. But does that mean I'm necessarily going to long that day? Well, that's going to highly depend on the lower time frames, because again, we're looking at this internal leg. Yes, it's a bullish internal leg. Yes, we're bullish on the external chart or the external structure, but I want to make sure my lower time frames, since I'm a day trader, are not telling me we're going to have a minor retracement. So let's say I look into the time frame and it has something like this, and this is all it is. Well, I'm still going to be bullish, right? Yes, we took out equal highs. Yes, we're in premium of the daily range, but the daily is bullish. If the 4-hour is bullish and it hasn't shown displacement down, I'm going to look for longs. Now, sometimes I might not find a long because you might get a quick reversal. But until you get this pattern right here, the displacement down, I'm not looking for price to return down to a discount. So if I see here, and you do see this, right? Well, then you're looking for price to come back down to a discount. So you could say I'm bearish on the day. We're going to go into, you know, how to enter this. And a lot of you guys are going to know this already, fair value gaps and everything. But overall, with structure, I'm looking at it in the sense of what is the higher time frame doing? What's its behavior? Is it expanding or is it retracing? Then I continuously repeat that process until I'm down to my 1 hour time frame, and then I'll refine that with my 15-minute. Once I understand that, that for the majority is how I get my quote daily bias. So a lot of people really overcomplicate daily bias. ICT overcomplicates the fuck out of it. Mainly it's displacement and structure. Now, for targeting, we're going to get into liquidity, but to understand which way the river is flowing, you just need to use structure and displacement. That's literally it. So again, this little crash course is meant to simplify things. I know this is still complicated concepts. I'm simplifying the best I can. But if anybody has any questions, go ahead and ask them now, because that's pretty much everything I wanted to go over. Facts said I got a Honda Civic gas tank. Hey, there's not Civics are good cars, bro. They're good ass daily drivers. What time frame do we chart the buy side liquidity or the sell side? So every chart. So for instance, if I am, let's just have this. We'll just do a markup. Let's just do a random pair. We'll do NQ because I haven't really watched NQ as much on lower time frames or anything recently. So here, I'll just delete everything. So look, if I'm looking at this on the daily, let's look in the weekly first. So I'm looking at this in the weekly. You know, we really have a massive bullish leg all the way from COVID to all-time highs, right? So we don't have anything to look to the left. This was just a mania. This is the craziest shit we'd ever seen in, you know, financial history, so to speak. I mean, look, we've seen other crazy stuff in 08, but I mean, this was really like, you know, it's insanity. So if we look at this, we don't have any, you know, old high over here. We don't. So we don't know when this is likely to come down and take this out. Some people use macro conditions, but if we're just using structure, and we look at NQ on the weekly, we look at where is liquidity in a discount. So if you notice, look what happens. When we come down, we come to a discount, we sweep liquidity, and price moves up. Now, I know a lot of you, based off what we just talked about, you know, you would almost look for new highs on NASDAQ just based on this weekly chart. Now, I'm not going to be that guy who's telling you, you're not going to get me to say the stock market's going to do that, but I'm just using this as an example because there are a lot of macro factors. But does this tell me that we're bullish overall right now? Yeah, absolutely. But as a day trader, we don't need to target fucking all-time highs on NASDAQ or say anything like that, but we need to look for liquidity above. So look, we come up here and see how we close this week. See this energetic push? That is displacement, right? That is a displaced move. This was questionable over here. So we came down, made a low or high. We took that out. That, you know, some could have said it's displacement. I wouldn't have, but this to me is displacement. So if we have a shift on the weekly time frame, so I'm telling you, you know, I'm looking for bullish price action overall based off this weekly time frame. Now that might change, but until we get a displacement shift down, like something like this right here, right? Then I'm not looking for more, you know, bearish price action just yet. Let's go to the daily time frame. So look how many swing legs were in the daily time frame. So let's just go ahead and map out each impulse leg of price on the weekly. So guess what we have here? We have our daily external structure. So you see how fractal that can be and how easy. I don't want to say it should be easy when you first start, but once you get an eye for displacement and really understand, you know, don't overthink it. Don't be so black and white. You have to think, what is going on from the eyes of a market maker? Where are the big pushes? You know, we see manipulation and then a massive move. That's a sponsored move. That's manipulated. That's directed. So that's where we get these ranges. So now we look at the time frames and we say, okay, we're bearish on the daily time frame. Now, you know, going off of that, we would look for, you know, higher highs. We'd look off the weekly. We would look to take this high out. But again, we don't need to do that as a day trader. I don't need to target that high. All I know is that I'm bullish and we're targeting liquidity in a premium. So guess what liquidity I'm going to target? It's going to be there. But again, on the daily time frame, so we have, here's our swing structure in the daily. Here's our swing structure in the daily, right over here. But if I want to look at the most impulse to see, okay, well, does that mean I'm just going to go into the market Monday morning and just open a futures position towards 13K? No, I'm not. right? I'm going to look at the most recent impulse structure that kind of gave us this. So that, for me, is this right here. So let's look. Okay, well, what do we have right here off rip? I mean, this is kind of going off track from the lesson, but overall, we're going to look for price to come down into the low of this range. So we're going to get a refined look. We're going on the 4 hour. So guess what we have here? Our external structure on the 4 hour. And, you know, guess what we have right here in the middle of that? A massive fair value gap. So if this is a huge fair value gap, so let's just refine this a little bit. Let's hop in the 1 hour. Got another one right there. So you see how you can do this and refine. If you want to go again, you go in the 15-minute and say we've got another one right here. You see how you can continuously refine these levels based off of we just went from the weekly to the daily. I know we're getting a little off topic, but now how would I say if the 4 hours here? Okay, have I got displaced from the 4 hour to tell me we're going to go back down here? Not yet. How can I maybe try to circumvent that? We'll go to the 1 hour right here. Did I get displacement right here? Yeah, absolutely. Displacement. All right, price came back up to a premium of that move. And then what? Now it goes down. So we're likely to seek out this low. All right, so let's go to the 15-minute. Okay, well, if we see price just consolidating here, and we come into the market and we take out a high, I'm kind of getting ahead of myself because we're going to go over most of this later, but let's say we take out a high, and in the lower time frame, again, you see this pattern. Well, you can target this low. But you see how I'm building that bias, but I don't have to necessarily, I'm not going to short it down to the 15-minute fair value gap. I'm not going to do that. I'm going to short it to liquidity. But again, we're going to go over all of that more in depth. Hopefully that helped with that explanation. But you're mapping out buy side and sell side on all charts. Just any other questions, go ahead and ring them off. I appreciate it, Collins. See, like once you start seeing this, like I'm just literally not even thinking about it. I'm sitting here just tracking, like, oh, here's another example. I can just tell you that's discount, moved into a fair value gap, expanded. Here's another leg. Guess what we did? Took out liquidity, expand. You see what I mean? Once you see it, you don't unsee it. Alrighty, on that note, if there's no more questions, I'm going to hop off here. As always, I appreciate you guys coming through. I will post this up to the private playlist. I don't know if I'll alert when it's posted, because as soon as we get off here, I upload it. It will be there within an hour or 2 hours. But until I see you guys on Monday, be safe, enjoy your weekend, get outside, and let's kill it.